One of my favorite companies to take a look at every 3 months is Visa Incorporated, and shares after they reported their Q2 results are staying relatively flat in the after hours. And look, whether you own shares of Visa or a competitor like MasterCard or American Express really doesn't matter. And in fact, if you don't own shares of Visa, I would highly urge you to watch a video like this all the way through, not just because of course it helps out the channel, but because I want you to become a better investor. And the way to become a better investor is by analyzing stocks in the market that provide you data points that your companies might not be able to. And there's probably no better company out there to give you data points on the economy, on the consumer, on travel, on restaurant, on overall spending than Visa out there. So that's why we'll take a look at, of course, Visa's Q2 results, which came out after the bell, but we'll spend some time talking about their conference call, talking about the comments management made in terms of consumer spending during a time of macro uncertainty. We'll take a look at some data points that maybe they're hinting at as it relates to other companies that are set to report later on in this week. We'll, of course, get into Visa's results. And the other reason I would urge you to watch a video like this all the way through is because if you only own companies like SoFi and Tesla and Palantir, and every time they report, you're on the edge of your seat, biting your nails, well, it might be time to expand your investing horizons and open up to a company like Visa, because this is actually a company that produces meaningful amounts of operating cash flows and returns those back to you, the shareholder, in the form of dividends and in the form of buyback. Speaking of which, they just announced a new $30 billion multi-year buyback, which I have no doubts in that they'll absolutely be able to execute. Hey guys, hope you're doing well out there. Time to take a look at shares of Visa that over the past 1 year have held up really well, up nearly 26%, even year to date, despite the S&P 500 being down roughly 5%. Shares of Visa actually up close to 8% on the year. Now, keep in mind, this company also gives you a yield, so you also are getting a growing dividend yield that pretty much rises 15% every year for the past, call it 15 years. But for that, you do have to pay up a little bit, as you are paying nearly 30 times a forward earnings multiple. Like we often say here on the channel, the higher quality a company is, the more you'll likely have to pay up for it. And that's not necessarily a bad thing, especially when a company so predictable and so consistent continues to deliver spectacular results. Now, Q2 came in like clockwork. They consistently beat analyst expectations, and this quarter was no different, with revenues coming in at $9.6 billion. That was good for 9.1% growth year over year. Again, beating those Wall Street expectations. Also came in with a nice non-GAAP earnings per share beat of $2.76. Like we said again at the top, this company is just so consistent, and that's what they continue to show quarter in and quarter out, really despite whatever the economy is looking like. This company did well during the COVID pandemic, as they saw a boost in e-commerce sales and e-commerce volumes. Then they did well in the recovery out of that, as they saw a boost in travel volumes. Then they naturally did well during a time of high inflation, because consumers tend to spend more when inflation is running rampant. So despite the economic conditions, it really doesn't matter how the economy is doing. Visa is a company that will continue to do well no matter what the economy is doing. And again, payments volume in the most recent quarter up nearly 8%. Cross-border volume, excluding transactions within Europe, increased about 13%, and then total processed transactions increasing about 9% as well. And like we said at the top, it's a company that now authorized a new $30 billion multi-year share repurchase program. Keep in mind, they still have an existing nearly $5 billion left on their current buyback as well. Now, in terms of the guidance, this is really something that I think investors were a little bit worried about what Visa was going to say. Well, they came in and they reaffirmed their full year guidance as well as the Q3 guidance for the current quarter. So for the current quarter, they're saying they're going to expect low double-digit revenue growth and high teens earnings growth. Similar story for the full year, as they're anticipating low double-digit revenue growth and a slightly slower lower teens earnings per share growth. And as you look ahead over at this company, well, on the EPS side, you expect those EPS growth rates to accelerate into Q3 and then into the rest of the year. And then as you look down into revenue as well, that's what you can expect in the low double-digit growth rates, basically into infinity over at Visa. So look, the guidance over at Visa was good, and that should really give you a little bit in terms of how Visa sees the consumer faring for the rest of the year. And in fact, on the Q&A portion of the conference call, Visa was asked extensively about how they see the consumer, really where they see spending patterns. And really the main point that Visa kept saying was that despite the macro uncertainty, despite the current fluid situation that we're in, they're actually seeing a very strong consumer, a consumer that's willing to spend on e-commerce, a consumer that's willing to spend on travel, a consumer that's willing to go out to restaurants and spend on experiences, maybe pullback in certain discretionary items like entertainment and hospitality, but not anything meaningful. The one area that they did see a meaningful slowdown in was travel, international travel, I should rather say, between Canada and the US. So incoming traffic from the Canadian border into the US, well, they did see a meaningful slowdown in the spend there. And so you can take a look at what companies that will affect most in the upcoming quarters. The other thing they were asked about is the pull forward in spending. Did perhaps they see an early evidence of a pull forward, again, due to the ongoing tariffs that have now taken place? And they did mention that there was some evidence of pull forward in certain categories. And one of the categories they highlighted was electronics. They said it was mostly in the first part of April, and they also shared the data through the 21st of April. And they also saw, as April went on, a little bit of pull forward as well into the back half of April. So that should really tell you that there's a couple of big electronic companies set to report on Thursday. That's Apple and Amazon. You'll likely see them talk a little bit about this pull forward. Mainly, I would say it affects Apple because we saw that news story saying that people were going out there, rushing out there to buy the latest and greatest iPhone, considering the prices of the iPhones were set to be hiked because of the tariffs. So despite this pull forward happening in the first week of April, and it actually won't show up in Apple's first quarter results, it'll likely show up in their guidance for the upcoming quarter because of this pull forward. We'll see also how it affects Amazon, considering they are a pretty big electronics seller. And of course, the China tariffs impact Amazon as well. So those are some data points you can extract from Visa's conference call. One thing is you have the, of course, electronics pull forward in spend. The other thing is maybe a slowdown in cross-border, specifically from the Canadian border into the US. Now, moving on to Visa's Q2, I mean, it was business as usual. That's one of the reasons why this is such a fantastic business, because it's a very low stress company to add to your portfolio. And despite whatever is going on in the economy, this is a company that can weather through recessions, weather through tough times, and do really, really well through good times as well. Now, from their balance sheet, you have absolutely nothing to worry about. You're looking at about $11.7 billion of cash. They also have about $3 billion sitting in a restricted cash account. These are for litigation cases that Visa and MasterCard, these companies, tend to see a lot of. So they have about $15 billion of cash and cash equivalents. In terms of liabilities, have about $30.3 billion in current liabilities. You see that did tick up about $4 billion over the past 2 quarters. What I do want to point out though is your long-term debt did tick down by the same amount over the past 2 quarters, and that actually shows up right here on the current maturities of debt. So they have about $4 billion rolling off the long-term side and maturing within the next 12 months, showing up here on the short-term side. But again, all things considered, you're looking at about $32 billion in current assets, so nothing to be overly concerned about. I mean, this company, from a balance sheet perspective, certainly very healthy, and they have an income statement that continues to support that. You have $9.6 billion of net revenue. Again, this was for the most recent 3 months, ended at the end of March. So again, this doesn't take into account that little bit of pull forward that they saw in early April. In terms of the expenses over at Visa, something this company does a really, really nice job controlling your personal expenses, basically staying flat on a year-over-year basis. Marketing did tick up a little bit. You also have a tick up in your network and processing, but keep in mind, as the payment network over at Visa grows, as you have more cards in circulation, more payment being processed, while the network and processing fees will continue to drive higher. You also have a little bit more in depreciation and amortization, but this company doing a nice job controlling those G&A back office expenses. And like we said, this company tends to put aside a little bit more in terms of litigation provisions. Certainly those lawyers and lawsuits tend to come at companies like Visa and MasterCard quite frequently, and so they do get ahead of that and put aside a little bit more into those escrow accounts. Certainly if those litigation or those lawsuits don't come Visa's way, well, then this money will flow back into the bottom line in a subsequent quarter. But all things considered, I mean, your operating income was relatively flat on a year-over-year basis. Again, if you strip out that litigation provision expense, well, then you were meaningfully higher compared to same time last year. So from a income statement perspective, I mean, you don't have too much to worry about. And then from a cash flow perspective, this is really what excites me over at Visa, because over the past 2 quarters, you've generated about $10 billion in operating cash flows. And this company doesn't have a whole lot of capex, just $700 million for the last 2 quarters. That leaves you with nearly $9.5 billion of free cash flow. Again, that's one of the reasons why, despite the balance sheet being not, I'd say, great, it's something you don't actually have to worry about, because this company generates nearly $9.5 billion of free cash flow in 2 quarters. And like we said at the top, this is a company that's extremely shareholder friendly. So you get nearly $8.4 billion back in the form of a buyback and another 2.3 in the form of dividends. Again, these are over the last 2 quarters, but keep in mind these dividends continue to increase over at Visa like clockwork, also the buybacks as well. And again, they authorized a new $30 billion buyback over next couple of years. So, I mean, financially, this company looks really healthy from the comments management made in terms of the consumer and the rest of the year's outlook. They're not reducing their financial outlook as well. I mean, things look good over at Visa. And what else looks good is the technical pattern as the stock continues to climb and make a pattern of higher highs and higher lows. In the more near term, you're sitting roughly in the middle of your uptrending channel. So it's not a point where it particularly excites me to add into shares of Visa or even start a new position, because you are in the middle of the channel trading near the top end of the range. Anytime you can see meaningful pullbacks in shares of Visa closer to the bottom end of the channel, which would be somewhere in the low 300s, well, then that is a point where you meaningfully add to your position. You continue to nibble in. If you don't have a position in Visa, well, that's a point where you certainly look to open a position. If this one completely craps out, goes all the way down here in the 270s, 250s, well then, newsflash, the whole economy is likely going to be crumbling, and you'll have a lot of other stocks probably down nearly 60, 70%. And so Visa at these levels would probably be the least of your concern. But again, if this one completely comes all the way back, well then that is a huge, huge buy the dip opportunity for shares of Visa. Not something I see happening, again, considering the fact that they're seeing the economy being relatively resilient. I expect this one to continue to chop sideways and channel higher. Certainly, if you push past your all-time highs somewhere in the 360s, well, that is ultra bullish, and you'll likely come up here in the $370 and $375 range. But again, you stretch this one out over a long, long period of time, and this is why you hold shares of Visa and you continue to buy into names like this one, because you stretch out an all-time chart like this, and I mean, it looks absolutely beautiful. This level of predictability along with shareholder friendliness is actually pretty hard to find. Visa, I think, does it really, really well. You also have other competitors like MasterCard, American Express to a lesser degree, that just have so many years of growth ahead of themselves that it's tough to bet against them at the current point. That was my take on shares of Visa. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.